FA2 Key Terms. Part A. Chapter 4. Posting transactions, balancing accounts and the trial balance. Personal accounts. Personal accounts include details of transactions which have already been summarized in ledger accounts. For example, sales invoices are recorded in sales and receivables, payments to payables in the cash and payables accounts. The personal accounts do not therefore form part of the double entry system, as otherwise transactions would be recorded twice over, i.e. 2 debits and 2 credits for each transaction. They are memorandum accounts only. Receivables ledger. The receivables ledger consists of a number of personal customer accounts. They separate accounts for each individual customer, and they enable a business to keep a continuous record of how much a customer owes the business at any time. The receivables ledger is often also known as the debtors ledger or sale ledger. Payables ledger. The payables ledger, like the receivables ledger, consists of a number of personal supplier accounts. These are separate accounts for each individual supplier, and they enable a business to keep a continuous record of how much it owes each supplier at any time. The payables ledger is often known as the bought ledger, creditors ledger or purchase ledger. Control account. A control account is an account in the general ledger in which a record is kept of the total value of a number of similar but individual items. Control accounts are used chiefly for receivables and payables. They should agree with the total of the individual balances and act as a check to ensure that all transactions have been recorded correctly in the individual ledger accounts. Receivables ledger control account. The receivables ledger control account, also known as the receivables account, is a control account in which records are kept of transactions involving all customers in total. It is posted with totals from the sales day book and cash receipts day book. The balance on the receivables ledger control account at any time will be the total amount due to the business at that time from its customers, and will agree with the total of the receivables ledger accounts. The payables ledger control account. The payables ledger control account, also known as the payables account, is an account in which records are kept of transactions involving all suppliers in total, being posted with totals from the purchase day book and checks issued day book. The balance on the payables account at any time will be the total amount owed by the business at that time to its suppliers, and will agree with the total of the payables ledger accounts. Sales tax. Sales tax is a tax levied on the sale of goods and services. Most of the work of collecting the tax falls on businesses, which hand the tax they collect over to the tax authorities. Sales tax is also known as VAT. Output tax. Output tax is sales tax charged on goods and services sold by a business, that is, the business output. Input tax. Input tax is sales paid on goods and services bought in by a business. The journal. The journal keeps a record of unusual movement between accounts. It is used to record any double entries made which do not arise from the other books of prime entry. Journal voucher. A journal voucher is used to record the equivalent of one entry in the journal. Trial balance. A trial balance is a list of ledger account balances shown in debit and credit columns. It is sometimes known as the list of balances and it is used as a basis for preparing the final accounts. Its purpose is to highlight certain errors that may have occurred in the double entry accounting system. Batch processing. Batch processing is where similar transactions are gathered into batches, and then each batch is sorted and processed by the computer. Control totals. Control totals are used to make sure that there have been no errors when the batch is inputted. A control total is used to make sure that the total value of transactions inputted is the same as that previously calculated.